Speculative European energy traders might be feeling bored and anxious at the same time right now, whereas physical buyers are probably just getting a little bit nervous. Hi, my name is Marcello Kolax. I'm the managing director at Clever Markets, where we help European energy trading desks with embedding systematic trading into their teams. And on this first Monday of November, I'm walking you through the European energy charts. First things first, of course, nothing we show here constitutes trading advice. Everything is just my humble opinion. And of course, you shouldn't take any trading advice from some guy on the internet. Okay, so this is the TTF sentiment poll at the start of this week. So you can see that from one week to another, we still have a fairly even split of the bulls, the bears, and the neutrals. And we're getting around 150, 200 responses every single week. And every single response here is from someone who has an actual stake in the European energy markets. I know my network, I know who's voting on LinkedIn, and it is all portfolio managers, hedge funds, energy traders, trading desk heads. So every single one has a very good idea of the market. And simply seeing that the market is super evenly split very well corresponds with the TTF sideways range that we've been dealing with for a couple of weeks. For now, I don't see an end in sight, but let's have a look at the charts themselves. If your team has been bleeding P&L recently in the current sideways markets, then it might be time to have a critical look at your team's decision-making process. That's exactly what we do at Clever Markets. More about that later in the video. TTF, NBP, German Power, EUAs have all been moving sideways for quite some time, and there's no end in sight. There's this old truism in technical analysis that goes, the trend is in place until it's not. I never really appreciated it until it really hit me. So this is the TTF front month as we have been seeing it for a couple of weeks and months now. So this whole thing goes back to late August, and now it's the start of November. While the TTF daily chart is within this 31.12 and 33.44 sideways range, there is no good big momentum trades available for anyone. So that means speculative traders are more advised to go onto the hourly chart to look for smaller swing trading opportunities, or rather mean reversion trading opportunities, because we are just reverting around the mean. You can see here on the hourly chart, it is a lot more tradable. The swings are a little bit too small, so trend and momentum tools are not all that useful right now. So that's why I would say, hey, better look at bearish or bullish oscillator signals to really make use of this. Here, just one sentence on how to trade with oscillators. First things first, we always want to see that the candles are actually giving us a bearish reversal pattern near the resistance of the range, and that we are getting bullish candle patterns near the support of the range. Now, on top of that, we always want to confirm this with an oscillator. So that means and oscillators are probably the most misunderstood tool out there. So here's the thing. We are not getting a bearish signal if we are moving into overbought territory, and we are not getting a bullish signal if we are moving into oversold territory. It simply means that the market is starting to make lower lows or higher highs. So it simply means we have the hint of a trend going on. So this is completely normal. This is how the tool is being calculated. So if moving into overbought territory simply means we're making lower lows and lower highs, so that is not a bullish signal. So what is the bullish signal? So here the bullish signal is moving from oversold territory into neutral territory, because then we are no longer making lower lows. So let's have a look at what that actually means. So for example, here we are getting a bearish signal. Boom. Was it confirmed with or was it initiated with a bearish candle pattern? Yeah, a hanging man, and then was confirmed the next day. Okay, let's have a look at here, right? So this is a bullish signal on the stochastic. Any bullish candle pattern here? Yeah, a bullish piercing line pattern that was confirmed the next day. Cool. What about this one here? We kind of got a bullish crossover here with, this is a bullish harami, I want to say, right? So we got a bullish trend going on here. So whereas looking only at trend and momentum tools on this hourly chart, which is a really tight range, looking at a simple moving average crossover, 8 and 12, usually pretty sensitive. So let's have a look. We would be getting a bearish signal here. Okay. And we would be getting a bullish signal here. Well, probably with this candle here, right? So not too bad, not too bad, but would have also backfired a lot of the times where we get a bullish signal here and the bearish signal there and the bullish signal here and the bearish signal there, right? So that's why we have to be super, super careful with the trend and momentum tools right now. Also, for any tools in general, I do not want to make any decision just purely based on an indicator trigger. I always want to see the market move first. So that means a bullish or bearish reversal candle. That means maybe on the 15-minute chart, a formation of lower lows and lower highs, or higher highs and higher lows for an uptrend, right? So we really need to be seeing something move on the chart first. Okay, so this is what I would be doing as a speculative trader. Now, what about the physical players out there? Well, some of them might be advised, depending on when their corridor is closing, to start buying near the lower end of the range, simply because we don't know how long it will be going on. So I don't want that anyone is holding out to the last minute just for the range to still persist. And while we are at the upper end of the range, you have to start making a decision, right? So some traders might choose to average in at the lower bounds of the rectangle, but it might be ill-advised to commit too much volume, hoping that the market might still eventually resolve lower. If we actually start breaking above the daily range, for physical traders, that would be probably the last chance to get some volume on the cheap, because then the bull trend is more likely to continue higher. Let's keep the position size small, stay uncommitted. Now is not the time to make big calls. All right, now let's have a look at the German power markets. Here I want to directly go to the daily chart where we have this ascending triangle. And ascending triangles are usually a bullish pattern. So what does that mean in practice? Let's have a look at this. So this here is an ascending triangle, and we see that the market is willing to buy at higher and higher prices, whereas the selling sets in at the same resistance levels. So that's telling me if there's a willingness to buy at higher and higher prices, that this whole pattern would eventually resolve higher. So that also means if we have a preceding downtrend coming into the pattern, that means that it is a bullish reversal candle pattern. And if we simply have a preceding uptrend, that simply means it's a bullish continuation pattern. So, but as you can see on the German power market, we are coming in from the side. So that means there's also no bullish resolution preference as of right now. So you can see we're just coming in from the side. There's nothing really happening. A little bit higher, a little bit lower, but overall nothing really. So that tells me that I am still acknowledging that the market is moving into an increasingly tighter range, but I am not 100% convinced that we will break higher. Okay, so as we are within this pattern, and that's exactly the same as on the TTF, I would avoid using trend and momentum tools because they have flatlined for quite some time and they're just giving us false signals left and right? Can you see here? Nothing has happened with the MACD for quite some time. And if you would try to trade this whole thing on the daily chart as well, that would also backfire because can you see right now, like what are we trading here? We get the resistance at the upper end of this ascending triangle. We're trying to go short, but look at this, like practically, you probably, if you're trading this market, you probably remember how convinced were you of the market actually moving lower? And we have the small bodies and the long wicks and the big gaps. Oh, here, yeah, this entire down leg was undone within one day. So this here really isn't tradable at all. So that's why, once again, we are trying to look at the lower level chart, which is where we are dealing with swings. We have a sideways flow, so we know not to do anything. We have a flow of lower lows and lower highs, which is giving us short selling opportunities. Here we are switching from a flow of higher highs and higher lows towards lower lows and lower highs. We have now approached this old support level here where the market might bounce, which is what we expect to happen at the start of this week, because we also did get a bullish oscillator signal, right? So this is where all the TA knowledge comes together. So here, once again, my suggestion, go into the hourly chart for earlier signals. Now, if you now might be thinking, hey, why not go into the 15-minute chart for even earlier signals? Okay, possible, why not? But below the 15-minute chart, there is only pain, at least for us human traders. So if we go below the 15 minutes, some of you might stomach it. I can't. Maybe your fingers are fast enough, mine aren't. And there simply is too much noise for a human trader to digest all at once. So this is left towards the automated traders, I would believe. Now let's have a look at the EUAs. Here we did a little bit of an update. You can see here we have a symmetrical triangle going on with the market moving into an increasingly tighter range. Now we are here on the daily chart, so once again, not tradable, but it is showing us that the market is indecisive. And the closer we get into the apex of the pattern, so the peak of the pattern here, right? That simply shows us that the trading opportunities are getting smaller and smaller and smaller and are maybe becoming non-existent, even on the usually helpful hourly chart. So let's have a look at what that looks like on the hourly chart. So maybe we're dealing with something like this. You can see a lot more tradable. And here, once again, we get a bullish signal from the oscillator here, and we get a bearish signal here, I want to say. Okay, so this it didn't work out all that well because TA is no magic. We got a bullish signal here, but we are not, let's have a look. Yeah, we got a bullish signal here. Perfect. I was just looking if this is a bullish reversal candle pattern, but it's not. So there's the idea of the market starting a little bit stronger this morning. So overall, you can see trading opportunities are diminishing. That also means we are getting bullish resolution triggers above 79.53 and bearish resolution triggers somewhere around 77.5. So the bullish or bearish triggers are getting earlier and earlier, while the immediate trading opportunities are getting smaller and smaller, the swing trading opportunities. So we're all just waiting for the market to break, so we get a bit of a momentum going on, which will then hopefully start resolving the rising wedge on the daily chart. You can see here our preferred scenarios, a little bit more sideways continuation before we break lower, because rising wedges are usually resolved to the downside. For the week starting 3rd of November 2025, I am offering 3 technical analysis audits to my audience. We've done hundreds of them, so we can easily benchmark you against your industry peers. If that sounds interesting to you, then sign up through the link below to apply for the TA audit. Thank you very much. See you around, and bye-bye.